Hey guys, welcome back to another week of Mortgage Matters in Minutes. This is Brent Rasmussen, and I'm here with Mortgage Specialists, giving you your weekly live Mortgage Matters in Minutes. And this week, we are going to speak about how to qualify for a lower mortgage rate or lower interest rate. And that's always a common question. How do I get a cheaper rate? Because cheaper interest rates will make your payment much more affordable and much more in the liking. So obviously we want to guide you in that aspect to let you know what is the best way and what are the tiers and things that lenders look at to price out the type of interest rate that you get on your mortgage. So we're going to talk about four things today. We're going to talk about loan types, adjustable rates, your credit score, and down payment. So generally these four topics are going to explain and give you your specific interest rate. So topic number one, loan type. So interest rates vary depending on what kind of loan you take out, whether it's an FHA, a VA, or a conventional loan, or a USDA, or a NIFA. All loans are going to have a different interest rate because each one of those types of loan guidelines set for a certain risk, and with that risk comes a specific interest rate. So you can look at right now, FHA and VA have lower interest rates than conventional. Over history and time, they always have, but the way the market has been this last couple of years, not all sellers are willing to accept an FHA or a VA offer, but we've seen that change. So as you want to look at different loan programs, those come with different interest rates. But I can always tell you, not the lowest interest rate is always the best loan for you, because sometimes lower interest rates come with extra closing costs. Sometimes lower interest rates come with that FHA loan that might not be as good as a conventional loan. So those are a couple examples. Number two is adjustable rate loans and or balloon mortgages come with lower interest rates than a fixed long-term interest rate would. Just because of the shorter amount of risk over the shorter amount of time, that lender is going to make it up to you with a shorter interest rate. So if you believe that interest rates in the future are going to come down, taking an adjustable rate mortgage is a good thing for you, or a balloon payment after 5 or 10 or 15 years. So those give you a lower interest rate, but not everyone wants to take on that risk, which I completely understand. So the last two topics are usually the biggest things we can advise our clients to look at is improving your credit score. On all loan types, credit score is one of the very first things that we all look at to give you an interest rate quote. As if you have a 780 credit score or 680 credit score, both FHA, conventional, VA, USDA, NIFA, all those loans are going to have different interest rates. Generally, every 20-point increments on conventional loans, you'll have a different interest rate, and very similar to that on FHA and VA. So the higher you can get your credit score, the cheaper the interest rate is going to be. So if you know possibly next year or in 6 months you're looking to purchase a home, it's always great to get with the lender to review your credit to see if there's anything that can be done to help get that score up, because I've seen many clients contact us only a month before buying a home, and I mentioned to them, I wish you would have called us 6 months ago and we could have given you some advice on how to fix your credit to take it from a 6 whatever to a 7 whatever, and that alone might gain you anywhere from 1/4 to 0.5% in interest rate. The last thing you can do and look at in order to obtain a lower mortgage rate is putting down a larger down payment. Whether you put down 5%, 10, 20, or 40%, or 30% in that regards, the interest rate generally can be different. It depends on what kind of a loan you're doing. If you're doing a refinance versus buying a house, whether you're pulling cash out of your house or just taking out and buying a new home or a second home, that down payment does make a big difference, especially on investment properties or second homes. The larger amount you put down, the cheaper the interest rate is going to be. Hope you learned a little bit here today about the 4 different topics it takes to gain a lower interest rate, which one, obviously, looking at different loan types, see which one is the best for you. 2, possibly looking at whether an adjustable or a balloon is a good option. The last 2 obviously are the best, looking at your credit score early, gaining those extra points that are needed to get the best interest rate. And lastly, if you have extra money on the sidelines, if you have the ability to put down a larger down payment, those are going to get you the best interest rates out there. We appreciate you guys always tuning in, being educated, getting information from here at Mortgage Specialists. We always are a phone call away at 402-991-5153. or you can reach out on our website at mtg-specialists.com. Hope you guys have a great day. We'll talk with you here soon. Mortgage Specialists. Driven, trusted, reliable.